Hey guys, what's up? Alec back with the daily stock market, and look at that, over $16,000 made in the last 6 months. However, if we go to the last week, it wasn't the greenest week in the world for our long-term account. But this week has a lot of potential to be a huge bounce back week for the account. Tuesday before the open, we have Alibaba Group reporting, the Home Depot, Sony. Tuesday after the close, not much going on. Wednesday, we also don't have much going on, but if we move over to Thursday, we have one of the biggest retailers reporting, which is Walmart. Walmart is always an exciting earnings to look forward to because it kind of tells us what the consumers' our spending habits are going up or down. We also have Baidu reporting, JD.com, John Deere, Under Armour. And as we can see, earnings season is slowing down because Thursday after the close, not much going on, and Friday all day, not much going on as well. So make sure you slap a big thumbs up on this video, share this video with a friend, and make sure you subscribe on YouTube for all the full-length videos. Also, if you want to join my close friends list, my private trading group, click on Success 2024. Read through some of those positive testimonials and success stories that have been happening in just recent months. Thousands and thousands of success stories at this point. We are raising the prices all the time, so it's always a good time to get involved. We're making money in the stock market, whether the market's going up or down, with option trades. Strike prices, expiration dates are all available, so just DM me to figure out how you can start making thousands of dollars with the stock market. Now let's dive in the video, and the first stock that we have to talk about is Alibaba stock, ticker symbol BA, reporting earnings Tuesday before the open. We can see in the last month they're up 7%, in the last 3 months up 10%, and in the last 5 years, we can see that the stock price is still down over 58%. If you've been involved in the stock market for a while, in 2020, you remember Alibaba was all the talk of the town. It raised good amounts. It's also bringing in great revenue and net income, which we'll look into in a second. But it peaked at $309 per share, and then it really never came back after that, falling as much as 79 to 80%, down to $63 per share. Currently, we have Alibaba sitting at $80 per share. So it's really not far from that 5-year low of $63 per share, especially considering April 19th, just last month, we had Alibaba at $69 per share. Keep in mind, this is one of the premier Chinese-based company stocks trading on the New York Stock Exchange with a market cap of $200 billion, massive company, a PE ratio, price to earnings ratio of 14, implying that they are an absolute steal compared to the rest of the market or the S&P 500 in general. We also have a dividend yield of 1.2 on them. And as we scroll down, we can actually see some of their past earnings results. And they usually come in and they beat earnings expectations, or at least meet earnings expectations. We can see that they haven't missed an earnings expectation yet. And remember, they are a positive earning company, and they have an EPS of around $1.40 per share, which is very good considering the company is down 58% in the last 5 years. And if we dive a little bit deeper, we can see Alibaba Q4 earnings due Tuesday, spotlight on e-commerce business, cloud business, and AI initiatives. From the peak market cap of $850 billion, almost a $1 trillion company in late October. It says 2022, but we know that it was actually late October 2020. So there's a little bit of a typo in this article. We continue to read Alibaba's valuation has plummeted to under $200 billion. So it's essentially been cut in a fourth. The company has been hit by regulatory clampdown and a lukewarm economy and competition. From a peak market cap of $858 billion, Alibaba's valuation has plummeted, and on Friday, the market cap is now at $194 billion. The decline began when the Chinese government initiated a crackdown on mega cap tech companies, citing concern that their significant growth granted them monopolistic power. It all started with Jack Ma, the CEO of Alibaba, taking on the Chinese Communist regime by criticizing banking regulations a day after Alibaba's sister concern Anti-Financial priced in its initial public offering. Repercussions soon followed. The company was slapped with a hefty $2.8 billion fine on the grounds of engaging in monopolistic practices, and the Ant IPO was soon shelved. Ma entered a self-imposed exile, leaving his trusted lieutenant Daniel Zhang to manage affairs in his absence. What started as an onslaught on Alibaba spread to other big tech companies as well. To make matters worse, despite the reopening of COVID-19 pandemic, the Chinese economy continued to reel under subpar economic growth and deflationary environment. Alibaba also faced competition from a breed of smaller social commerce companies which integrated social interactions and e-commerce, like Temu, for example, offering personalization content recommendation, user-generated content, and influencer endorsements. Okay, they're mainly talking about Temu there. Now we can continue to read that Alibaba's turnaround efforts included a decision in March 2023 to splinter the company into 6 businesses. Its core Alibaba domestic e-commerce business, and then you can read those other businesses there that they're going to be splitting into. In June, however, the company's leadership baton was passed to Eddie Wu, one of the co-founders, and Zhang was relegated to the role of heading the company's cloud business. Subsequently, in September, Zhang stepped down from all his roles in Alibaba. Under the new leadership, this splintering strategy was reversed. The plan to IPO the cloud business was abandoned in November, and earlier this year, the company has also scrapped the other IPO plan, opting instead to acquire the remaining 36% stake it did not already own. So, lots of turmoils and lots of headwinds for the company, but as you can see, a lot of this is short-term fears and short-term problems. Nothing fundamentally wrong with the business, so if you are a longer-term investor, then this should all be ironed out in the next year or so here. However, if we look at the Q4 expectations, analysts on average expect the company to earn $1.41 per share on revenues of $30.42 billion. This compares to the year ago of $1.50 per share and $29.15 billion. Alibaba's Taobao online shopping and Tmall B2C business to consumer online retail platforms may have seen strong sequential increase in gross merchandise value. China reported a year-over-year growth rate of 5.3% for the March quarter, surpassing the consensus estimate, although the consumer spending did not show significant improvements. Alibaba recently intensified its focus on generative AI, a cutting-edge technology that has seen widespread adoption recently. Last week, the company released Qwen 2.5, the latest iteration of its family of large language models. On earnings, watch out because they could be talking more about this AI cutting-edge technology, and that could definitely boost the stock price if they hit hard on AI. If we take a quick look at what analysts have to say about Alibaba, we can see that on average, there's a $106 price target on Alibaba, which would be around a 32% upside in the next 12 months, according to analysts, with the lowest price target of $80 per share and the highest at $131 per share. We can also see, if we scroll down, where these analysts are coming from, the 5-star, the 4-star analysts, and how long ago that they reiterated these price targets. We can see the first 3 are all above $100 per share, and they're all pretty good analysts as well. This analyst here being one of the higher ones, we can see that he has a 55% success rate, and this analyst has a 58% success rate with both over $110 price targets. However, if you want to see exactly what I'm buying before earnings, if it's Alibaba stock, calls, puts, everything in between, just message me here on Instagram and join my private trading group. The next stock that we have to talk about is Walmart, the giant. Yes, the retail giant. They are about flat on the week, flat on the month. In the last 3 months, they're up 7%. Year to date, they're up 15%. In the last 12 months, they're up 18.8%. In the last 5 years, they're up 80%. They're also currently at an all-time high of around $60 per share. And just recently, December, they were closer to $50 per share. So as we scroll down, we can see that their market cap is $487 billion. So they're halfway to the $1 trillion mark. Not nearly as big as some of the other companies or businesses that we talk about on this channel, but that's a good thing because it shows that there is room for growth when it comes to Walmart. They're not maxed out yet, and I could definitely see Walmart becoming a $1 trillion company in the next 5 to 10 years. We also see that they have a PE ratio of 31, implying that they are a fair value overall, maybe a little bit overvalued, considering that, a fair PE is closer to 26 to 23. However, Walmart does have a really great moat and a strong competitive durable advantage, unlike a lot of the other companies. So you're going to want to pay, well, there's obviously just going to be a little bit of a premium when it comes to buying Walmart stock. So in my opinion, 31 PE ratio is pretty fair for Walmart. We can also see that a dividend yield of 1.29, which is another good thing. As we scroll down, we can see that they constantly beat their earnings. The last 3 out of the 4 earnings all were a beat. They have an EPS of 49 cents per share, so they are a great profitable company. If we look at what hedge funds are doing leading up to the earnings, we can see that a lot of them are buying in the last 2 quarters, 83% buyers and then 67% buyers. If we go to insiders in March and April, that tells a different story. Well, let's go back to February because we saw $26 million of insider sells and 0% buys on Walmart. The next month, it was pretty 50-50 split. April, just last month, we saw 74,000 shares selling. 95% of insiders are selling. And most recently in May, so far, we've seen around 3,000 shares sold with 0 shares bought. Now, this was a really alarming month because 26 million shares were sold in February. That is definitely concerning, something to look into. If you're a huge Walmart advocate, definitely want to figure out what that's about. Here are some other standout months where insiders were selling. And then this is the 4th standout month, June 2023. So if you want to look into June 2023 and then the next following months, how the stock performed after around 30 million shares and insiders were sold, that could be a good thing to be looking into. We can see insider sentiment about Walmart is negative based on 5 informative transactions in the last 3 months. This is not investment advice, keep in mind. Now, here's something to consider because retail earnings are coming up, not only Walmart, but Home Depot. Remember, Friday, we saw a sharp miss on consumer sentiment data. It puts even more focus on the late earnings season of the retail push going on with Walmart and Home Depot. Get the big ball rolling in their respective segments coming this week. Walmart's rising online presence help lift its forecast into modestly positive terrain. Flagging home improvement markets have Home Depot foreseeable outlook in the red. Walmart has shaped a tight 8-week flat base ahead of its earnings. And remember, Walmart reports Thursday. Home Depot, which reports Tuesday, has fallen to test a 200-day support. Another retail reporter on Tuesday is Boot Barn, ticker symbol BOOT, which has a year-to-date gain of more than 35%. Now, for Walmart, investors will be looking for insights into consumer spending patterns, which is a good thing, or why Walmart is always so scrutinized, because people really want to look for those insights of consumer spending patterns and the company's spending plans. After announcing member plans to acquire Bus in an effort to build up its business and for the economic data, it's a pretty busy week. The data will be watching most closely the consumer price index that's out ahead of the open on Wednesday. So Wednesday before market opens, remember we have that CPI report coming out. It is the first look at inflation since the Fed's decision last week. The expectation is for core CPI to raise 0.3% in April from the prior month, and on a year-over-year basis, it is excluding food and energy, expected to raise 3.6%. Other data includes retail sales and the producer's price index. Housing will be another focus as we get readings on home builder confidence and housing starts and building permits that will do it for today's market dominance over time. So yes, there is a lot going on this week and a lot to keep up with, but make sure you jump in that private Instagram and private Discord, because we do voice calls in the morning where we share our screen so you can see exactly what a professional trader looks for and what their screen looks like in the morning, and you could hop on that video and voice call with us and understand the markets and be able to read them a little bit better. So this is the best way to get ahead of the curve in the stock market, the best stock market trading family group on the internet. So if you're not there yet, try it out. I'm running a promotion right now. Just DM me on Instagram to look at my website to find out how much it costs, and all other questions you have, just DM them over to me and I'll be happy to talk with you. If you don't have anyone to talk stock market with, or your family's not into stocks, or your friends aren't into the stock market, that's what our group is developed for, is to help people like you have a community they can rely on. So thank you guys for making it to the very end of the video. Share this video with a friend, subscribe on YouTube, hit the like button. That's all I ask for, and I'll keep making these videos for you guys, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.